truth is, you got to learn how to use your email.
Hi, I'm Robert Maltby with Maltby's Minute on the Market, and Hillary is just leaving. The truth about October is not about crashes, although it is infamous for a couple notable crashes. Actually, the reality about October is it's not a bad month. It's averaged to be up on balance about 40 basis points, and it is the first quarter of the best quarter of the year. What affects October sometimes and makes it a little bit more volatile is that it's the year end for mutual funds, and they're selling their losers, and that can cause a downdraft in the market. Let's talk about our indicators right now that we're getting into the cusp, the core of earnings season. Our indicators are neutral, but that is up from bearish, so that is moving in the right direction. Now, we're cautious because importantly, on a technical basis, we've got a mixed picture, and all important market indices are below their 200-day moving averages. They need to break above that resistance for us to have a serious advance. The focus is on earnings per share, and we have a situation of bifurcation. We're going to have some really good earnings and some really bad earnings, and they're going to skew good and very ghoulish. The good earnings should be in consumer discretionary. That sector in the S&P is projected at this point to be up 9%. That would include restaurant, travel, housing types of issues. With no surprise, the downside is going to be in energy. That sector is projected to be down 64% year over year. So it's pulling the whole earnings season down. Now, our liquidity indicators are net positive. We led by, of course, corporate activities, mergers, acquisitions, buybacks. But now, in the last several weeks, the public is starting to rotate back into equities. We had a positive $5 billion in the last month flow into mutual funds and ETFs. That's good, a good sign. Now, the key is valuations. There's three ways we look at that and get a summation. To summarize the summation, we look at book or a historical replacement value. On that basis, this market is about par, which is good. We look at versus alternative investments like the bond market. And of course, the earnings yield of the stock market is above the yield of the corporate bond market. That's why we're getting a lot of these M&As and buybacks. The economics still are there. And also, we look at versus gross domestic product. And on that basis, the market looks just a little bit rich. So we've got this picture that skews a little bit positively. Now, right before Halloween, we have Janet Yellen and her team, the Federal Reserve, getting together for a meeting right before Halloween, wherein they will again decide whether or not to hike rates. We think that is definitely not going to happen. The market is telling us at some point in the next 9 months, probably next year, we'll get a 25-point hike. So on that note, there'll probably be more of a treat than a trick. Visit our website, millennium-asset.biz, and download our asset allocation and look at our 15-year track record. Happy Halloween. This is Robert Maltby, Maltby's Minute on the Market.